All right, welcome back. You know, in other news, you had to search hard for this one, but this news goes largely unreported. But we'd like to bring you this story, okay? FedEx was the first to kind of give us a hint of this headline a few months ago by commenting on the total number of boxes shipped, right? But cardboard box demand, it's plunging at rates that we haven't seen since the Great Depression. Demand and output for cardboard boxes and other packaging materials cratered in the fourth quarter of last year. That's according to the data released by the American Forest and Paper Association, as well as the Fiber Box Association. U.S. box shipments fell by 8.4% during the fourth quarter last year alone. That was the most severe drop since the great financial crisis of 2009. U.S. box operating rates fell to 80.9%, again, a low not seen since 2009. We get a little of this. Supply of container board used to make boxes is historically high. Nobody's using it. Our next guest refuses to be boxed in. Please welcome to the show Scott Bauer, joining us from Beaver Creek, Colorado. Scott, thanks for being on the show, repping your Cubs gear. Okay, so is this not a little one of those microcosm things that gives you a hint about what's really happening in the economy?
Yeah, but we're not in a recession yet, right? Come on. I mean, seriously, you know, you look at something like this that would not be on people's radars, right? It's you know, something you wouldn't think about, but then you look at this industry, and what does it tell us? It tells us that people are not shipping as much. Why is that? Because they're not buying as much, and that's because we're in a recession already. So I'm not going to say that this is the end-all, be-all recession indicator, Scott, but this is just another notch to say, I don't care what the metrics are saying out there about growth or not. Average Joe, average guy on Main Street, we are in a recession, and this is just proof of it. This really is proof of it. You break this down, I mean, you know, who would think about cardboard boxes? This is really a decent indicator.
And after what we got from the CEO of FedEx saying nobody's shipping it, or not, the shipping rates are way down, right?
Yeah.
That combined with the fact, now here's what I want to, just you're going to be on the slopes and a lot, whatever you're doing out there. But when you say we're in a recession, I agree that this economy is not in anywhere near the great shape that everybody wants to tell us it is. But then people throw that 11 million JOLTS numbers back in my face. Well, how do you explain that away?
You know what? It's still an effect coming out of COVID, out of the pandemic, in my estimation, Scott, that we don't know the real data. You know, we just went through something over the last couple of years that we've never experienced, right? It's been 100 years. So we don't know the real data of, are people back at work? How are they measuring it? So that 11 million number, it's certainly way too high for the Fed, but I don't know. I still don't know if that's accurate. And that's how I look at that, because we don't know if people are back at work or not.
Right. And look, there's no way you're getting out of Kroger for 6.5% more this year than you paid last year. I mean, that number is pie in the sky, number one. And then you got savings rate at all-time record lows, credit card usage at all-time record highs, interest rates on the credit cards being jacked through the roof. I can name you 20 indicators that could refute that JOLTS job index. I'm saying this. I'll say it right now. If we do have a very hard landing and the economy goes into kind of a tailspin and that number doesn't change, I think we just got to ignore it from now on.
I mean, I don't know the significance other than it's a data point that to me is not as useful as it once was. You know, Friday, with the January jobs number, that is going to be a number that I think we could look at much closer and trust much better than the JOLTS number, though we still don't even know really what is going into that number in terms of was there holiday hirings or what, you know, what are the layoffs after the holidays. But this is a number on Friday. To me, that's going to be the market mover of everything we've had this week between earnings, the Fed just now. Friday is going to be the market mover. And if JOLTS is any sort of representation, and if you know, ADP we got this morning was kind of the opposite of that. That was a very dovish number, but ADP hasn't been something to really be trusted over the last few months. So if we get a hawkish number, a beat, 190, 200, 220, whatever it is, this market is very ripe for a quick sell-off.
Well, because it seems like that wall of worry has been climbed by the bulls when there's been no bears around. And to your point about those jobs, 150,000 just by the tech area alone over the last few months. And out of the top 3 or 4 tech companies, they can be responsible for 50,000 of those layoffs. So when does that come through in the numbers? I mean, look, when we have, it's what I'm trying to say is it's crazy what I'm doubting the BLS, but I'm believing what the American Box Association is telling me about shipments, right? Because if we're not using cardboard, nobody's buying and selling anything. But then we have somebody over here on the other hand saying we have 11 million jobs open. It just doesn't add up to me.
So at some point, we have to believe in common sense as opposed to these data points. I think we're seeing that right now, Scott. In a number from these box people, that's connecting people, or that's connecting, the economy to you, to me, to our friends, to our acquaintances. That is, that's what we're seeing. That really breaks it down. And the BLS, it's tough to really buy into the data that they come out with. It really is. But then you get something like this that totally hits Main Street. It totally hits it.
All right. And we've got, I'll end it on this one, Scott. We had the Philly Fed come out and challenge the BLS by saying, look, you say it was 1.1 or 1.2 million jobs we created last year. No, it's more like 10,500.
Right.
Now, that seems like a real number, right? But if you have one of those numbers that you can't really rely on because the jobs feeds into inflation, feeds into the GDP, if one of them is not rock solid, then it makes all the other ones a little bit iffy. And I would argue the fact that the GDP number of 2.9% last month, that's suspect as well. So we're going to have to wait and see. But I think that we've got a great reconciliation coming around the corner. But that's what I have to say.
And from the data standpoint, lastly, I think by the time we get to third, fourth quarter of this year, we are going to see so many revisions for all of these data points.
All right. That'll make me feel better. Okay. I appreciate you coming on. Take care of yourself.